I definitely heard of Bitcoin back in 2010, 2011, but it was a little weary and still weary even, these many years later as well. With Bitcoin, especially, it's not really known to me. It's not really like transparent in terms of where the value of the coin comes from and the change in that. Maybe I'm just not looking in the right spot. The actual transactions themselves, it's just doesn't feel like it's there right now, so that I can't go into the corner store and buy that bottle of water. Maybe in the future we're always going to be transacting with Bitcoin and that just kind of goes away, but that's a distant future in my head. I like your analogy of the ocean. That's a really good way to look at Bitcoin. I always kind of thought myself as having to drop directly into the middle of the ocean, but you're right, I don't have to. I can just dip my toes in, thinking about it as a store of value, but then also just thinking about its accessibility. I definitely am kicking myself for not buying more Bitcoin way back then. For sure.
Welcome to Sat Chats, the Bitcoin podcast, where we chat about sats. Sats are the smallest part of a Bitcoin, the same way pennies are the smallest part of a dollar. With Sat Chats, we are building the world's biggest Bitcoin welcome center to serve as your gateway to generational wealth. So if you are brand new to Bitcoin, and if you ain't that brand new to Bitcoin, we want to chat about sats with you. Head to satchats.com to grab your slot in the studio today. I'm your host, Stuart, Bitcoin Dad. And today in the virtual studio, we have got number 118, Adhiran, my old sales engineer. Why don't you tell our Satillionaires a little bit about you, and then we'll kind of get into what's holding you back from stacking your first sats.
For sure, yeah. So Adhiran Thermal, based out of Waterloo, Ontario here now. So I spent most of my life in the West Coast, out in Vancouver. So when I was working with you there, Stuart, I was out that way, but just made the move a little bit further out east, be closer to family and whatnot. Been in the software space and in the cybersecurity space for quite a number of years. And yeah, an avid investor. So, been investing in the market itself. And I've avoided crypto. And so we'll get to that in a little bit, but I definitely heard of Bitcoin back in 2010, 2011. But it was a little weary and still weary even, these many years later as well. So, but, yeah, that's me.
So you said that you are an investor. What have you been investing in?
Yeah, so primarily stocks. So stocks is usually like the big thing, and just like in the market there. So definitely have done some like options trading and things like that. But primarily go-to is buying some stocks and getting dividends, being able to hold on to some stocks for a while. But then also occasionally, whenever I kind of sniff something out where something big is about to happen, especially as a stock gets clobbered by the market for whatever reason, I love to jump in and ride that high.
So it's not like you're someone who's foreign to the land of investing, but you have not touched Bitcoin. Why not?
With Bitcoin, especially, as well as, the other crypto coins that are out there, it's not really known to me. It's not really like transparent in terms of where the value of the coin comes from and the change in that. So if you have a bad quarter as Apple, you don't sell as many iPhones as you projected, all of a sudden your stock goes down a bit because of that. There are obviously, outside situations that happen. But typically it's pretty well known, like what's happening. So if you're losing a bunch of money off of a stock, it's fairly obvious why that happened. Whereas like with Bitcoin, with other cryptocurrencies, it just doesn't seem as transparent to me. But I'm a pre-coiner still, as you said. So maybe I'm just not looking in the right spots.
Well, so it sounds like it sounds like you have not yet dabbled in Bitcoin at all because you don't understand what its value is. Okay.
Precisely. Yeah.
So first things first, let me package up every single cryptocurrency you've ever heard of: Ethereum, Solana, Cardano, Monero. Fartcoin is actually one of them. Can't forget about Fartcoin. You and I can just put all of those cryptocurrencies in a box, and we're just going to slide it over to the side for now, because on Sat Chats and with most Bitcoiners, we believe Bitcoin is Bitcoin and crypto is kryptonite. Bitcoin is truly the promise of digital money. Cryptocurrency is people trying to variate on Bitcoin's original promise to maybe make it even more scarce or a little bit faster or even more private or whatever. And they're kind of not creating something that is significantly better than Bitcoin. And Bitcoin being the one that came first, the one that's the biggest, the most trusted, it's like, don't even worry about that stuff. So I would focus only on Bitcoin to get started. But let's talk about Bitcoin's value. You could approach Bitcoin's value through the lens of humanity and say, well, humans declare it to be valuable, therefore it is valuable. However, since you have a background in cybersecurity, you have a background in sales engineering, and now delivery, bless your heart, it's probably even more interesting for us to first approach Bitcoin's value through the value of its technological aspects first, right? Do you want to explore that with me?
Yeah, would love to.
So Bitcoin has me pumped up, Adhiran, because it is a technological breakthrough. It is as big as penicillin. It's as big as gunpowder. It's as big as the printing press. It's as big as the internet. Bitcoin takes that centrally managed source of money and breaks it up into 1,000 individual nodes, 10,000 individual nodes, 100,000, and eventually millions of people who are now using it. Bitcoin takes money and it breaks it up and distributes it to all the people on earth who can now say, hey, this is my money that I use. I've worked hard to earn this Bitcoin. It's not fair for you to tell me one day that there are 100 trillion US dollars, and then the next day, since you've spent more than you really earned through taxes, you just declare there's now 110 trillion US dollars. You're diluting my share of the pie, and that's not fair. So with Bitcoin, we can say that we own this many Satoshis, and that's how much we own. And since there's only 21 million, you can't dilute my share of the pie.
Yeah, so it's interesting because the value of the Bitcoin itself, like if we were only dealing with Bitcoin, I think is fairly obvious, fairly transparent, and it's like really easy to understand. But it's this in between time now where you're converting that Bitcoin to buy, a can of soda or pop, here in Canada, like we call it. But anyways, you're able to actually do that with a true, US dollar, true Canadian dollar. And it's possible, I suppose, to be able to buy it with Bitcoin, but just the infrastructure, the actual transactions themselves, it's just doesn't feel like it's there right now, so that I can't go into the corner store and buy, that bottle of water that I feel like right now, whereas I could with a US dollar or Canadian dollar. And you're definitely correct in the sense of, because the central banks are able to print money, be able to create money when they need to, it's able to dilute that currency, and the buying power kind of changes. But at the same token, it's well documented, well captured in terms of what that conversion looks like. Whereas I think like with Bitcoin, and I think primarily a big portion of this is because the central banks don't want, consumers like you and I to transact with Bitcoin. There are a bunch of barriers in place. And, I know we took those the other crypto and put it into a box, but one crypto that, might be interesting is like a US backed, cryptocurrency, or a UK backed cryptocurrency, or Canadian backed cryptocurrency. Like, because then that exchange back to a typical Canadian dollar or a typical US dollar or UK pound, it's somewhat known. But then it loses all of the benefits that you just talked about from a Bitcoin perspective around the transparency of when the Bitcoin is mined, being able to even have a blockchain for all of the various transactions to showcase that this Bitcoin hasn't been fraudulently given to someone, right? So,
Yeah, because Bitcoin follows rules, and each of these nodes enforces those rules. And the rules say things like the supply is capped, period. And with a government token, Dane, you and I have to follow the rules of the government token, but the government does not have to follow the rules. Like, they're like, nah, you got to play Ninja Gaiden. We get to play Ninja Gaiden with the Game Genie. I'm like, well, of course you're going to win with the Game Genie because you give yourself 99 lives before you even start. Like, that's not fair. But let's kind of unpack some of your hesitations there, because there's a couple of different layers, right? So, first of all, I heard that part of what might be holding you back is the fact that Bitcoin's exchange rate with your Canadian dollar is not as easy to predict in advance as the exchange rate between the Canadian dollar and the US dollar, or between the Canadian dollar, the UK pound. Like, you almost want to kind of know in advance how much you're going to get, even if it does fluctuate a little bit here and there. It's not so volatile that you might end up needing to exchange your Bitcoin for Canadian dollars at a moment where you have to take a hit because you've invested in Bitcoin at this amount, it's dropped to this amount, but now you need to pull on those resources. And dang, I invested 1,000 Canadian dollars in Bitcoin. I have to sell it at a loss for 800 to cover some expense. And I would much rather have something that's almost like a stable coin, you might say, like the USDC or whatever that is, to kind of protect myself in that way. So, the first thing I would say there is, for me, I really don't want to live in a world where my government is trying to decide how many of your government's tokens it can get for its tokens. It just feels like one dude making something up and another dude making something up, and them trying to figure out how much of their made up stuff is worth how much of the other person's made up stuff. Like, if I had a gold bar in Canada, it would be worth one gold bar in the US. Like, you don't have to make any decisions. Again, it's like so much arbitrary randomness is piled on top of each other over the decades that you lose sight of like the actual world, and the fact that a gold coin would be worth a gold coin anywhere in the world. So when I think about Bitcoin, I think about your history as an investor, and one of your hesitations was, hey, I don't really want to get involved with Bitcoin because it's not a medium of exchange yet. When we think about what makes good money must store your value. Good money must operate as a medium of exchange, and good money must operate as a unit of account. So that means good money must be able to buy you the same amount of stuff that it could back when you set it aside in the first place. Good money has to be something that other people accept when it's time to buy something. And good money has to be able to tell you how much something is worth. So it's like, hey, if I put aside $10 a year ago, I should be able to buy $10 worth of stuff with it today. Somebody should accept those $10 in exchange for that soda pop. And it's easy to say this is worth $10, this is worth $1, this is worth $100. You can't really say, hey, this soda pop is worth 2 square feet in the corner of, or hey, can I get this soda pop for 5 drops of crude oil. Those are not, neither of those are good mediums of exchange, and they're also not very good units of account, right? But the dollar, the Canadian dollar, excellent unit of account, $1, $10, $100, excellent medium of exchange. The Canadian dollar is accepted everywhere in Canada. The US dollar is accepted everywhere in the US, and quite frankly, in locations around the world. The biggest problem for me with the US dollar, with the Canadian dollar, is that it does not store my value. You know, if I put $20 aside in the 1990s as a child because I want to be able to go to my local movie time, this was before Blockbuster, you know, with that $20, I could get more Airheads than I knew how to deal with, more X-Men collectible card packs than I knew what to do with, plus a video game and a movie rental for the weekend. And I said, you know what? When I get to be a 40-year-old man, I want to be able to do that. So I'm going to put my $20 aside now. The $20 from the 1990s, if I went to that movie time today, number one, it's not there anymore. I went bankrupt. Number two, Blockbuster also bankrupt. Number three, I feel like the convenience fee for buying a single ticket to the movies is $20 these days. I'm like, I would not be able to get those Airheads, those X-Men cards, that movie, that game. I'd be lucky to get 4 Airheads with $20 these days. So that money does not store my value. And what I'm hearing from you is, hey, man, I don't want to engage with Bitcoin as an investment, as a store of value, until it is also a medium of exchange.
Yeah, exactly. No, you're definitely correct on that front. The only point of hesitation that I have, like with what you chatted about earlier, is that you wouldn't stick that $20 like into your mattress. You could. That is an option. Yes, you're right. Like in that form, your $20 is going to be worth a lot less today than it was in 1990. But if you took your $20 and invested it appropriately, if you didn't buy, you know, just like a checking account or savings account, but actually properly invested it, then theoretically you should have roughly that same buying power. It's not $20 today. It's going to be worth a lot more, but you're able to still have that same buying power. Hopefully that's the promise. I agree with you. I don't think that's actually really true for most folks. Like, you know, maybe if you bought some stock in Apple back then yes, you could probably buy all the X-Men comics that you wanted and everything like that. But, you know, it's kind of a tough perspective because, yeah, and again, I think you're completely correct. It's because there isn't really an easy way to exchange that Bitcoin. Like in Vancouver, there are a bunch of ATMs where you could go in and convert your Bitcoin into Canadian dollars, and be able to, go ahead, buy that can of soda that you want. I know there are mechanisms, like there are different types of apps that are out there, different organizations where you could actually transact, where you do take your soda can and you're able to pay for it with Bitcoin. But at the end of the day, it's still doing that exchange to a Canadian dollar. It's not like that corner store is going to recognize the Bitcoin itself. They're recognizing the Canadian dollar. And so you're still at that, mercy of the volatility. But I still feel as though, like, thinking about it in a different way, and thinking about it from the perspective of investing, it's kind of a nice approach, like with Bitcoin. Like if you were to be able to, again, not store that $20 into your mattress, but to be able to put that into, some type of an investment account where you've bought something of value with the Bitcoin. It's tough and it's difficult because of what you've just described with the blockchain, where, you have to associate that particular Bitcoin with this stock and then be able to actually capture it. It's one of those interesting things where, like, through the transparency, and I guess this is why there's other coins that have existed to be able to transact faster and things like that. But you're having a really difficult time being able to track, which stocks have you purchased, like with that specific Bitcoin, especially if you are, day trading, if you're getting options, things like that, where you're transacting a lot more frequently than potentially that ledger could account for. But so I guess, my holdup is the exchange itself. But I think we're at a time where yeah, that fiat currency is what's dominant. Maybe thinking about it differently. Like I remember Bill Gates was thinking about creating a, autonomous vehicle lane or highway between Seattle and Vancouver. And the toughest thing holding it back is the fact that right now there's a lot of people that are still wanting to drive their cars. How do you actually prevent, people who are actually driving their cars from entering that specific space, right? And like it's again that like weird in between time. Maybe in the future we're always going to be transacting with Bitcoin, and that just kind of goes away. But that's a distant future in my head.
Well, there's a lot going on there, dear, and I think the first thing to do would be to treat this idea of if I had invested $20 in the 1990s and stewarded that diligently and managed that proactively, then 30 years later, I would still have $20 worth of purchasing power. I think you're right, but why do I have to do that? I mean, if I put 20 units of my time and energy into this bill, into this $20 bill, and then I need to put 20 more, 40 more, 400 more over the following 30 years to preserve that 20 units of purchasing power, it's a raw deal. Like, why can't I have a form of money that preserves its purchasing power over the ages? Like, it's almost like the government is saying, hey, here's this money that you get in exchange for your time and energy. If you want this to still be good in the future, you need to do a lot of work, okay? Because it's kind of like I've given you some quicksand or I've given you a melting ice cube. It's up to you to put the melting ice cube into a freezer and power the freezer and maintain the freezer and manage it. Otherwise, it's just going to melt into a puddle, bro. It's like, okay, that doesn't really seem like the best money for me, but I appreciate it. And, what it has led me to do is to say, okay, you know what? Let me just live life on life's terms. I would like for Bitcoin to be a widely accepted medium of exchange. I would love to tap to pay with my Satoshis at the checkout. We're not there yet worldwide, point blank. Okay. So that's that. And I can have the serenity to accept it. But also, my government's money is not a good store of value, point blank. And that's just a fact. So why do I have to choose one form of money or the other? Why can't I decouple my store of value from my medium of exchange and simply drive my long-term savings into Bitcoin and use my US dollars to buy things every day? And what that looks like today is my monthly budget is in US dollars, and I'm assigning US dollars to all the different spending categories, and my savings, the amount of money that I want to try to put aside this month gets dollar cost averaged into Bitcoin each week through an automatic buy that I have set up on Bitcoin Well, which is a Canadian exchange, by the way. That I think they're based out of Edmonton, I believe. So that I can basically store my value until I need to convert it over into a medium of exchange, right? Like, why must you choose one money when for the course of human history, you had people who held both gold and silver? You know what I mean? You had people who held gold and government currency. Now, let me pause on that for a second, Adhiran, because you talked about, hey, what if I could buy stocks with Bitcoin? What if I could use Bitcoin to power my investments? Well, check this out. What if Bitcoin is the best investment already? For the past 16 years, okay, Bitcoin has been around for 16 years. Do you know what the top performing asset 16 years in a row is?
Do not know. No, I'm gonna let you answer for me here. I'm guessing
It's Bitcoin. Let's imagine you said, hey, I've got 20, because you found Bitcoin in 2010, 2011. Let's just say Bitcoin was worth $1 during that time, okay? And you said, all right, I'm going to take $20 worth of Bitcoin and I'm going to buy $20 worth of Apple stock with it. Okay, that's pretty neat. And 16 years will have passed and your $20 worth of Apple stock would probably be worth quite a bit. I mean, how much do you think $20 of Apple stock would be worth if you had bought it 16 years ago?
Quite a bit, probably like into $200. I'm not sure exactly, but that's my kind of, yeah,
Yeah,
guess.
I mean, 10x sounds pretty good, right? I mean, a 10x your investment when savings accounts pay you 1%, 10%. Let's imagine you said, you know what? Never mind. I'm just going to buy $20 worth of Bitcoin and hang on to it as an investment. Okay. I can't go buy anything at, the Tim Hortons today, but whatever. I'm an investor. I'm going to have some stocks. I might have some real estate. I'm going to have a little bit of Bitcoin. So for $20, I can get 20 Bitcoin because Bitcoin is worth $1 a pop. I'm not going to do anything at all with it. I'm not going to maintain it. I'm not going to manage it. I'm not going to reinvest it. I'm just going to leave it there. One Bitcoin is worth $111,720 today. Adhiran, that means that your $20 16 years ago would be worth $2.2 million. $2.2 million. $2.2 million. Okay. 2.2, Adhiran. You said your Apple stock might be worth $200. It would be worth 2.2 million. And listen, man, Bitcoin has only been around for 16 years, and we have reached something like 1.3% global adoption, 1.6% global adoption. What happens when 100% of the world adopts Bitcoin? What do you think the exchange rate is going to be for one Bitcoin?
You got a good point. You got a good point there, but I think there is that, it's going back to that like trust though, right? Like whether that we can trust that the Bitcoin will actually like be there, right? Especially if you're not moving it around. Like if that Apple stock completely collapsed, which is going to be pretty unlikely, like you're going to have some indicators showing that, that's about to collapse. I suppose you can run that same argument though with Bitcoin, like where if it is about to tank, you're going to know about it. You're able to get out and be able to, convert your gains into, US dollars or Canadian dollars. So I'm with you there. And I definitely am kicking myself for not buying more Bitcoin way back then for sure.
Now, here's the thing. It's going to do that all over again. It's going to do that all over again. Okay. Between now and another 16 years, it's going to do it all over again. Okay. So if you bought $20 today, 16 years from now, that $20 will be significantly more than any other investment you can choose. And what's really nice is you could just put 20 bucks into it now and be like, whatever. If this goes to zero, it's not going to hurt me. But if it goes to 2.2 million, I'm going to be really happy. And I'm going to go, dang it, I should have done even more research and bought 200 or 2,000 or 20,000. Now, Bitcoin is ultra easy to exchange. I can sense some hesitation around, well, if I get all the way into Bitcoin, how easy is it to get back out of Bitcoin? And the answer is easier than your normal investments. And here's why. Your normal investments are available to you between 9:30 a.m. and 4 p.m. Monday through Friday, unless there's a holiday or a run on the stock market. Okay. So you might feel like, oh, if Apple stock is about to tank, I can get out. But if they announce a bomb Friday at 4:30 p.m., then all of the insiders get to trade the beast out of that thing Friday, Saturday, and Sunday. And they leave you with a pile of garbage Monday morning when, regular hours reopen for all of us plebeians that are, using our online trading accounts to try to get out ahead. It's not cool. It's not cool. And when you think about the operating hours of the stock market, out of the total number of hours in the week, it's 1 in every 5 hours. So out of every 7-day week, 20% of the time you can do something with your investments.
That's a good call out. That is an interesting call out. That is, yeah.
I can send a text message to you 100% of the time, and it's just data being sent across the internet. But they're like, oh, you want to send some financial data across the internet? Ooh, can you come back tomorrow? We're closed.
True.
It makes no sense.
No, that's a good call out. No, you're definitely right with the markets kind of being the way that they are. On the flip side, though, like is there a lot more volatility like with it being open 24/7? Like is like as an investor, as you know, a trading company, like does it not create kind of like a really terrible work-life balance, like where you're constantly like watching its value, right? Like not that it's you know it not that it's that's going to prevent me from actually going into it, but I'm just kind of thinking about that, like in terms of like if I go into Bitcoin, do I have to watch it 24/7? But I guess that goes back to your earlier point around you should be able to have this investment that you really don't have to nurture, and yeah, kind of that melting piece of ice that I've got to put into a freezer that I'm powering, right?
Yeah, yeah, yeah. And think about when you go swimming out into the ocean, right? Like when you first start with Bitcoin and you stack your first $50 worth of sats, you've put your toe into the ocean. And when the waves come in and then you can feel them suck back out and then the waves come in and you're right there where the waves are crashing onto the ocean. But next month you buy another $50 worth of Bitcoin and now you're a step closer to the ocean and you're still getting, sloshed around by the waves. But each week you buy $50 worth of Bitcoin and you're walking further out into the ocean. Eventually you get past the waves and you're just sensing the tide coming in and the tide going out. But you keep going, and over years, I'm talking about $50 a month for decades, you are eventually so far out in the ocean that there is no shoreline. There are no waves. There is no volatility because your cost basis for Bitcoin, let's say if you started last year, is $60,000. And the volatility of 100,000 up to 120, back down to 100, back up to 120 is meaningless to you because your cost basis is so far below that there is no real volatility. And if you need to take your investment and convert it into something else, you're doing it in a way that your investment has doubled. If you're at 60 and you sell anywhere between 100 and 120, you don't care. You don't care. Right? So Bitcoin for me is a long-term. Bitcoin is like light, Adhiran. Light is both a wave and a particle. Bitcoin is both an investment and currency. And I feel like over the next 10 years, we will see lots of adoption of Bitcoin as a store of value. And once you reach kind of a point of saturation where people have more Bitcoin than they have dollars, they will necessarily need to start spending their Bitcoin. More retailers will accept it. It will become a medium of exchange over time. It kind of started off as a medium of exchange and is now a store of value and will become a medium of exchange again. But it's this wild form of currency that preserves your purchasing power and protects you from inflation, from government money printing. It's available worldwide. It can be used anywhere globally at any time, permission free, no third party. It's the money of the future, but it's okay to use it as an investment for now. And my buddy Simple Steve, he realizes that it's going to take some time for it to become a medium of exchange. So he buys everything on his credit card. He's like, look, man, people don't even use cash anymore. People don't even use Canadian dollars. They don't even use US dollars. They use their credit card. That's actually the most widely accepted medium of exchange. He pays with his credit card. And then once a month, he goes to an exchange like Bitcoin Well and says, okay, I'm going to sell you this many Satoshis to get this many dollars to pay off my credit card. And I'll see you next month.
That's a fair point. No, it's a really fair point. I guess one question that I have for you is in terms of like the signals that you're seeing where the value of Bitcoin is actually still going to go in that same trajectory. Like what are you seeing that gives you confidence that it's actually going to, still maybe not necessarily be in that same like exponential growth, but still on a pretty intense and insane growth that it's going to outperform, the S&P 500 and all of those usual indicators from like an investor perspective.
Okay. Well, the biggest thing I did, Adhiran, was I read the Bitcoin Standard by Saifedean Ammous. He is an Austrian economist. He's not from Austria. There is a school of economics called Austrian economics. And unlike Keynesian economics, which is we operate in a Keynesian economic model, which says governments can print money for free and it's fine. The Austrian economics says you cannot spend what you do not have. You cannot spend what you do not have. You must actually have money in order to spend it. So that book taught me about the history of money and how the widely accepted form of currency dies when a better form of currency shows up. And so it goes through and says, hey, glass beads used to be money in Africa until Europeans showed up. Europeans could make unlimited glass beads in Europe and simply transport them down to Africa and say, hey, I hear you guys feel like this is money down here. Why don't you give me all of your resources in exchange for this money? And then off they went with Africa's resources, and Africa was left with a money that was worth nothing. You know, there were cultures in Southeast Asia that used stones as currency, and an Irishman rolled up, blew up a bunch of it with dynamite, rolled up to their island, was like, hey, I hear you guys think these stones are money. Why don't you give me all your coconuts? And they're like, 100%, we're rich. And then he left with all their coconuts, and they were left with money that meant nothing. You know, Europe adopted gold. China and India adopted silver. Gold was harder to find than silver. And so their gold was worth more than their silver. And they rolled up and said, hey, why don't you give us all your resources for the gold we have? And they walked away with all of China and India's resources, and China and India was left with silver, which was not as good as the gold, and they're still trying to catch up today as a result of choosing the wrong money. China and India chose the wrong money in the 19th century, and they're still dealing with it, right? So I look at today's currency, which is basically just paper that is backed by your government. And that is just not as good. Like, and I have the best money in the world. Some would argue the US dollar is the best money in the world. It's way better than the Argentinian peso. It's way better than the rupee. It's way better than the South African rand. But ultimately, it's a form of money that my government makes up. And it says, look, you know, what is this back? This dollar is backed by the world's superpower. Okay. That's not so bad. The world's superpower backs this money. I know I can count on it. But guess what? Bitcoin is backed by the world's supercomputer, right? The US dollar is backed by the world's most powerful superpower. Bitcoin is backed by the world's most powerful supercomputer. And it's actually not a single computer. It's 23,000 individual computers creating this digital hydra that I dare you to try to find and shut down. Where is it? It's everywhere. So when I think about currency and the history of currency, I'm like, man, this stuff was the bomb. It's no longer the bomb. And people who exchange their US dollars for Bitcoin, the wealth transfer is going to go to them. And people who hold US dollars, it's going to be like people who decided to hang on to seashells when gold came around. Because how much are those seashells worth today? Nothing. Not anything. How much are the stones worth today? The glass beads? Nothing. And I feel like Bitcoin is going to go up to $100 million a coin. And then it's going to shake off the US dollar entirely because the US dollar will be worthless and Bitcoin will simply be the world's money. So Bitcoin is going to continue to ramp up in value against the US dollar until the US dollar becomes as meaningless of a money as glass beads and seashells. And then simply Bitcoin will be left and Bitcoin will be worth Bitcoin. That's what Bitcoin will be worth, is Bitcoin. Because nobody goes and says, hey, Adhiran, how many seashells can I get for this Canadian dollar? What do you mean? That that is a meaningless form of money. No one would ever perform that exchange rate ever. That makes no sense. Like, it's not money. Eventually, people, they won't even be calculating how much dollars their Bitcoin is worth because dollars will be meaningless. Now, that might be 100 years from now, but I'm getting my Bitcoin now, baby. I'm getting it right now. Okay?
That's awesome. No, definitely. Yeah, you make some really good points. My one other question around this, though, is that, it is difficult to dip your toes into Bitcoin because, one Bitcoin costs what it costs. Like, so if I was to invest that like $50 or the $20, like I'm buying like a fraction of a Bitcoin. And I guess to some extent, then now I'm left with this trust in an exchange where my fraction isn't going to be diluted somehow. Like, so like Bitcoin itself is well backed, well captured. It captures all the points that you talked about. But if I'm bringing in $50, I can't buy a single Bitcoin. I got to buy a fraction of it. So I'm just kind of curious on that front. Like, if is there anything to ensure that the fractional amount of Bitcoin that I buy today isn't going to change?
Yeah, well, the amount, and they're called Satoshis, right? So since one Bitcoin is worth $111,420, I ain't got $111,420 because, even though we have a great daily podcast here on YouTube, a really fun live game show on Fridays, I ain't Mr. Beast. And I'm not making $4 to $6 million a month on YouTube ads because I have 400 million subscribers. So I ain't got no $111,000. But each Bitcoin breaks down into 100 million Satoshis or sats. And so for $50, you can get like 45,000 Satoshis. Okay. And that's your share of the Bitcoin network. Since Bitcoin's supply is capped at 21 million, you cannot dilute that share, period. The pie is the size of the pie, and your share of the pie is your share of the pie, period. If they print 10% more money today, then your purchasing power is diluted by that amount. But since there will only ever be 21 million Bitcoin, your 50,000 sats will remain 50,000 sats for the rest of all time. Right? So you can count on Bitcoin to be there when you need it. And that share, your share of the network, that's a better way to talk about it. I believe your Satoshis will stay the same. I believe your purchasing power will increase, and it will increase dramatically because fiat currency has no bottom. So Bitcoin has no top. But the better way to think of it is your share of the network will always remain the same so long as you don't add to your Satoshis or subtract from your Satoshis. Like, your share of the network will not change unless you change your share of the network. And think about this, Adhiran. If Bitcoin is going to be the money of the future and the whole world will be operating on these 21 million Bitcoin, then you need to divide 21 million Bitcoin by 8 billion people or 9 billion people to say, hey, if it turns out that the nation state paper, like the era of 200 different currencies, according to what part of the earth you're on, if that era of history goes away and is replaced with Bitcoin, then what's my fair share of the network? Because everybody needs to use Bitcoin. What's my fair share? Well, 21 million Bitcoin divided by 8 or 9 billion people is 250,000 Satoshis. 250,000 sats, which is about 250 US dollars. So you could, if you wanted, drop 250 bucks into Bitcoin, get 250,000 sats, and say, you know what? If this turns into the world's currency, I'm going to have my fair share.
That's cool. No, I like your analogy of the ocean. Like, I think that's a really good way to look at Bitcoin. And yeah, I guess like for my time as a pre-coiner before this podcast, I always kind of thought myself as having to drop directly into the middle of the ocean. But you're right, I don't have to. I can just dip my toes in, get some Satoshis and be able to still, yeah, like be able to still use that as an investment vehicle. And the sunk cost of potentially of buying an actual Bitcoin, which was possible like in the early days of it, even though that's gone, just letting go of that and thinking about it from a Satoshi perspective, from a sat perspective, would really help. So man, well, good job in naming your podcast what you did, because now it all makes sense.
And nobody needs to talk about Bitcoin anymore, because that is, it's like Berkshire Hathaway stock. It's like, dude, I ain't got no $3,000 for one share. We're done with that, right? We're focusing on the 100 million sats that are in each Bitcoin. And it used to be, hey, I got one Bitcoin, I'm the man. I'm just focusing on 1 million sats. My satillionaires in the audience, what if you could get up to 4 times your fair share of the network? You'd have 1 million sats. Well, let's try to become satillionaires. But there is so much to Bitcoin, Adhiran, that we will never fit it into a single chat about sats. So we do ask each of our guests if they'd be willing to come back on in 9 months to give us an update on their Bitcoin baby. Would you be willing to do that for us?
Definitely. Yeah, I'm in.
All right. Thank you for that. I can't wait for that, because we're gonna keep working together. We're gonna get further out into the ocean. We might do some surfing. We could do some free diving. We don't know yet. But let's recap the conversation here with my friend Adhiran. He and I first met when we were at Security Compass together. I was the sales rep. He was the engineer. And you first encountered Bitcoin in 2010 or 2011, did not engage with it. You carried on investing in individual stocks because that's what you knew, that's what you trusted, that's what you understood. And it was even easy for you to do that through the Canadian banking system, where you can kind of buy stocks directly through your bank and move money in between as opportunities arise. We talked about some of the things that were holding you back from stacking your first sats, and they included things like, why is Bitcoin even valuable? I can't really buy stuff with it. And we launched into a conversation of, okay, look, man, it's okay to have more than one form of money in your life. If the money you're using is an excellent medium of exchange, but it's not a great store of value, then don't try to store your value with it. Find a money that stores your value and store your value there, and then use the money that is a good medium of exchange when you need to exchange it for something. Now, you might argue, hey, well, my store of value are investments. They are stocks. Well, guess what? Bitcoin is a money and it is an investment, and it has gone up 100 million billion X over the past 16 years, and it's going to do it all over again, because only 1 to 2% of Earth has figured out that there is a new money here that has turned the US dollar into a seashell, and you just don't know it yet. Okay? And as the world realizes that Bitcoin is the new gold and that nation state currencies are the new seashell, they will exchange their seashells out for gold until seashells become a meaningless artifact of time. But you don't have to go whole hog into Bitcoin. You can buy $50 a month, and you can listen to Sat Chats when you're in the shower or you're at the gym on the treadmill because you hate cardio and you need someone to, I'll keep you company in your car drives. If it's 3 hours to the downtown Toronto from Waterloo, that's like 3 solid episodes of Sat Chats. So we had a really nice conversation about sats today, and I'm really pumped up. I'm going to make you an offer here in exchange. Let me just tell you this, Adhiran, I believe in Bitcoin so much that I'm willing to stack your first $50 for you this month. I'll do it for you, my guy. You know I'm a sales rep. I'm going to lower the resistance so low that it's like, dude, I'm going to get you a free trial of Bitcoin this month. And then all you got to do next month is decide if you want to buy more. But before I do, I'm going to take a little break here because we did a lot of work and that burns calories. I need to refuel my brain from our massive conversation about Bitcoin with some Ithaca Hummus Black Bean. Ithaca Hummus is our lead sponsor here at Sat Chats, and it is absolutely fantastic hummus. I'm going to serve as your taste buds here today. Here we go. That's good. It's like a Mexican restaurant. You know what I mean? It's like black bean. It makes me want some huevos rancheros. You know, like eggs, black bean, salsa, something green. Maybe it's green onions. Maybe it's jalapeno. I don't know. Cheese. That is freaking delicious. All right. This is a $50 bill here in the United States. Okay. We got old Ulysses S. Grant. Who's on the $50 Canadian bill, Adhiran?
I completely forget who's on it.
Bro,
it's a red bill. I remember that much, but I completely forget who's actually on it.
Dude, I mean, doesn't this money sound fake while we're talking about it? I know it's the bright red slip of paper. Okay.
It can go through laundry as well. So there is that benefit.
So what I've got here for you, Bitcoiners believe in exchanging value for value, right? Fiat currency believes in exchanging value for no value at all. They just made it up. Here you go. But you brought a lot of value onto this show. I want to compensate you for that. But now that we've chatted about sats, I'm going to give you your choice, man. You can choose $50 US. It's right here. It's real. I keep it in a case because it smells bad and I don't know where it's been. And it might be harmful. It might be harmful to the skin. I don't know, man. This stuff kind of spooks me out. Or you can get $50 worth of Bitcoin. I can offer you 45,100 Satoshis on me. I'll stack your first $50 this month right now. Which one do you want?
I'll take the sats. Let's do it.
Yeah. Come on. Yes, dude. Because in your form, you said I'll take my $50 in cash. And this was going to be a hard battle. You know what I think about you? Get out of here. Bye, Felicia. Get off the table. You go to the corner. You think about what you've done. Wow. Amazing. I can't believe you decided to stack the sats, dude. I'm so pumped. Yes. All right. Adhiran is now officially a Bitcoiner. Let's go. You bring our show's scoreboard to 111 guests who have stacked the sats, along with 9 who have chosen the cash. And I thought for sure, I'm like, dang it, Adhiran, he's going to take me up to 10 who have chosen the cash. We're going to officially break into double digits. We are not. We are dunking on cash on this podcast, and we are not going to stop. All right, man. Adhiran, do you want to send our Satillionaires any old where to engage with you online or to your company or to your...
Welcome anyone who wants to follow me on LinkedIn. It's actually the only social media that I'm really using right now. So if you want to give me a follow, that's probably the best place to find me. But I gotta say, no, I think the reason why you won me over on sats over the actual dollar is just, thinking about it as a store of value, but then also just thinking about its accessibility in the sense of, $1 equals 900 whatever sats it was today, which is a lot easier to deal with than $1 equals one, fractional amount of Bitcoin. So I think that's what kind of got me into that, because I was still in that early days of Bitcoin world where I was like, okay, I got to buy an entire Bitcoin. And you thinking about it from Berkshire Hathaway perspective, I think it's 700,000 or 800,000 roughly for one. It's a lot worse than you thought, but yeah.
Well, I'm so pumped. I just am so pumped that we got you there today. All right, Satillionaires, if you enjoyed the chat about sats today that I had with Adhiran, and you are as pumped up as I am that my guy came in here with reservations and he is now a Bitcoiner. We have officially increased Bitcoin adoption worldwide right here on YouTube. If you want to increase Bitcoin adoption worldwide, then you need to help me do Satoshi's work, okay? Get in here and orange pill these pre-coiners with me. Subscribe to our channel on YouTube so that we can grow, so that YouTube will show us to more people, so that they will listen to Adhiran's story and go, man, I had the same hangups as he did. Now I'm going to stack my own sats, okay? When you subscribe to our channel, turn on the notifications while you're there by hitting that bell icon. We are going to put 10,000 YouTube subscribers underneath our Christmas tree this season. That means by December 25th, we want to get to 10,000 subscribers. To thank you for helping us get there, we will be selecting one lucky subscriber at random and dropping 2 million sats on your head. If you liked this episode, you can join us every weekday at 11 a.m. for episodes just like it, except on Fridays where we play TikTok Next Block. That's our live game show. We put 1 million sats on the line. You can sign up at satchats.com. You can skip the line to play TikTok Next Block by jumping into the live chat on Fridays and playing along with us. If you get the answers right first and you end with the most points, we take the top 3 players in the chat. They skip the line and they play the game next week without having to wait. So if you are an OG Bitcoiner and you love that we're out here doing Satoshi's work and you want to donate some of your Satoshis to the next brand new Bitcoiner, if you want those Satoshis to go to the next Adhiran, you can donate your sats to us on chain in the address in the show notes. Our Lightning address is also there if you want to zap us those sats. If you're a sponsor and you want to be on the walls, you want to help push us forward, you can reach me, show@satchats.com. One final note, SatChats is for educational purposes only and should not be construed as financial advice. Also, our guests' views are their own. Until next time, keep stacking those sats. Yeah! Get rid of your red bills. Put your red bills in the wash and just hope they get lost like a sock. Stack the sats. See you on the next one, man. Bye-bye.